Hi, I'm Michelle Gordon with the Gordon Group, Keller Williams Realty, and today I am here with Bill Cole, State Farm Insurance. Thank you, Bill, for being with us today.
Thank you for having me.
And we're going to talk a little bit about the importance of homeowners insurance. We're comparing policies. I want to look at not renters insurance, but homeowners insurance. How do I compare to make sure that they're apples to apples? Because when buyers bring policies to me on the same house, I can see a policy for $300 a year up to $900 a year. What am I looking at?
There's quite a huge difference when it comes to homeowners insurance. For one, claims handling. You understand how that is because you had a fire loss. And of course you want a company that has a good reputation, a solid credit rating that's going to be there if you have a loss, and an agent and a claims department that will walk you through that loss and get you put back to where you were before as soon as possible. So that's a big part of it. Another thing, of course, cost. But when you're looking at a policy, there are a bunch of different forms of homeowners policies. There's a basic Form 1, Form 2, Form 3. What those mean, essentially, are the types of covered losses in the homeowners policy. We usually suggest that people at least have a Form 3, meaning the covered perils for the dwelling and actual cash value or replacement cost for the personal property on the exact same perils. Now, things like lightning strikes, falling objects, windstorm, hail, weight of ice and snow, all of these things are things that are mostly covered under that Form 3 homeowners, so we do suggest that people at least look for that, because we have seen quotes where people come in and they have a dwelling amount and they have a basic Form 1 homeowners, and a lot of those are just coverage for fire and or theft. And there are a lot of other things that can happen to your house that create losses, especially with our winter weather here in Michigan. So we do ask people to take a look at that. Another big thing that we're seeing now is because of the real estate market and the cost being up and down. Somebody may purchase a house for, say, for round numbers, $100,000. Well, when we're looking at a homeowner's quote, we're looking at rebuilding that, because that's what we're going to owe you if you had a total loss fire. So we have to put the stats of the house, the square footage, how many rooms, what it's made out of, into a tool that's going to give us an estimated rebuild cost, which sometimes can be very different than what they paid or the market cost of the house. So it's something to look at. Now, people can insure the house for what they want to or what the bank is asking.
I understand sometimes it's more expensive to insure a lesser amount than a full amount, or a higher amount rather. Is that true?
Yes, sometimes, depending on which company you're going with the homeowners, they like it when you're insuring to 100% of the value of the rebuild cost of the house, where when you start to decrease that, it's not really like you're getting a discount on it. So they like to make sure that we're insuring at least for 100% of it. But like I said, it is up to the client. They don't have to do that, but that's usually a suggestion. When we're looking at it, we want to make sure that we have proper coverage, that if you had a total loss, that we're going to be able to rebuild your dwelling the way it was, similar like construction.